I'm very pleased to welcome back to the show James Thorne. He's the Chief Capital Market Strategist, Senior Portfolio Manager of Caldwell Investment Management, manages their Pendragon Investment Fund. Great stuff. Caldwell U.S. Dividend Advantage Fund. Been in the business, well, I don't want to say for years because I don't want to age James. He looks great, but managing billions of dollars. We're lucky to have him this week on the show. James, thanks for finding time for us.
Thanks for having us, Michael.
What a great fortuitous time after we watched the kind of market action we got on Thursday in the States, especially. Once it broke, man, did it ever go down. Then we get a little rally on 700 points Thursday, a little rally on Friday, then pow, down at the end of the day. When you look at that kind of stuff, do you first evaluate why you think it happens and whether it's significant enough to merit any action on your part?
What we do is we have a risk control model that we ask, should we be, simply put, in stocks or bonds? Should the offense be on the field or the defense be on the field? Mm. And right now, and the key, I'm going to simplify it, if the yield curve, which is the difference in price of interest rates, if the short-term interest rates are lower than long-term interest rates, credit is being created, global growth is going to keep on going. And as long as you have a steep yield curve, then it's stocks over bonds. If you invert the yield curve, when the Federal Reserve starts raising rates to have short-term rates higher than long-term rates, then you put the defense on the field. So firstly, we are very are constructive on global growth, and we are constructive on the stock market. I think one of the things and we were using these periods of dislocation or chaos, or however you want to say, as opportunities to buy companies that we really, really like, that are really well positioned for the themes that we think are going to last for the next 3 or 4 years. And so we look at these as big buying opportunities. There is a term called entropy, which is, when we get too much of a lack of order or predictability, it turns into chaos. And, Michael, I think over the last 2 weeks, we've had so much change thrown at us in the markets that we have entered into this period of entropy where people really don't know what to do. People pull back from the markets. The computers or the bots take over and start taking technical levels out. When they start taking technical levels out on the downside, when nothing's changed, this is your time to buy the high-quality companies that you've always wanted at bargain basement prices. So we look at this as an opportunity.
It's interesting, as you say, within that context, because the baby does get thrown out with the bathwater, because the overall market starts this sort of waterfall decline. I think that's not overused when you talk about a 700-plus point decline on Thursday, and that's what you're saying. Way too much stuff that doesn't have a problem, as you say. Nothing changed, and hence it creates that advantage. And I'm thinking with you, because you guys have done so well understanding blockchain and those sort of technological changes. Of course, Pendragon Fund is a global fund. You look everywhere for things, but I just was thinking of that, man, that would, if you're looking for an entry point on a couple of strong stocks, strong industries, that kind of a decline provides it, and you have to be prepared for some volatility along the way.
You do, and one of the themes that you've talked to your listeners about, which is very profound, is you've always been saying for a period of time is every company is now a technology company. Yep. And that statement is profound because where we are in the global economy, the way we talk about it is we're moving from the world of analog to digital. And we're in a period of time where artificial intelligence, Internet of Things, the blockchain, and big data are in a confluence where it will be the bubble and the economic growth period will be stronger than it is in the 1990s when it was technology, which is our personal computers, telecom, which was the build-out of the Internet, and media. So the big theme in the 1990s was TMT. Last week, there was a company called Micron, and Micron is going to grow its earnings by over 100% next year. It is trading at 6 times. When the numbers came out, it went down 7%. Now, the earnings of the S&P 500, or the price-earnings ratio of the S&P 500 is around 16 to 17 times, and we could argue whether that's pricey or not over in a historical period. But when we have a technology company that's trading at 6 times, that's growing its earnings by 100 times, and it's down 7% after a wonderful quarter, you have to look at these periods of times as opportunities, and there's not going to be too many of them. So you need to take advantage of them after you've come through this period of time, or in your mind saying this is a period of time until the Federal Reserve raises interest rates so that the short-term rate's higher than the long-term rates. I'm going to use these periods of dislocations or periods of high levels of entropy to go in there and buy those stocks that I have on my shopping list that I've done my homework on. I'm going to take advantage of the emotion.
That's such a great example for me. And when you see me next, James, you can smack me in the head for this. But if we go back quite a few years, I wasn't comfortable with a lot of fund management. I'm going back quite a while. And as the market, it seemed to me, became even more sophisticated. And this is such a great example, what you do at Pendragon. I mean, first of all, I think I have sophistication, but I don't have time to look around the world. I don't have the time to check out, as you've made recommendations in the past about certain opportunities in Europe. I don't have time, maybe I know the U.S. banking stocks, but, you made a very strong recommendation of those well over a year ago and, of course, did very well. But this is another example. I'm not familiar with the stock, but that's what a fund manager like you does, is that you have a team and you spend all your time looking for the very things according to your criteria. And to me, it's just a great argument why you let professionals manage your money. Well, professionals with a track record, all the things that you'd normally do. But this is a great example, is because I'm nodding my head as you say the baby's going to get thrown out of the bathwater. There's stocks that have really promising earnings scenarios, but they decline just because of the overall market. Hence, that's your opportunity. And I'm nodding my head, but a professional like yourself and your team are the ones who have discovered these. You have a list already. You already know what their performance is going to be, and hence so you're looking for entry opportunities. And I'm just saying this is exactly why people need professionals like yourself with their eye on the markets.
Well, you're right, and go back to the way you started out our conversation. The Facebook idea, the Facebook about having centralized data, what's going on there. That is also, we can take that to Google, right? And then when you look at Cambridge Analytica and you do some research on that company, and you recognize the fact that the parent company is very well connected with individuals that went to the school Eton in England, and you recognize the fact, and you start, and I'm going to put some conjecture out there, but you know what? Maybe there was a government that got involved in the American election, and maybe it wasn't Russia. Mm-hmm. Maybe it was an island. Maybe it was the United Kingdom.
Interesting.
Right?
Yeah.
Maybe, I'm not saying this in a bad way, and I don't have any data on it. But when you stand back and you look at it, and you start connecting the dots, there's just so much cross currents. Like, for example, with Trump and China. I mean, you have Greg Ip that just finally we had an adult in the room. Great piece in the Wall Street Journal this weekend by Greg Ip from Carleton University, got his first job with the Vancouver Sun, and he writes in the Wall Street Journal this weekend that, hey, it wasn't the United States or Trump that started this trade war. It was China. Like, finally we're getting some adults in the room. And, Michael, global GDP is $75 trillion. What China and the United States are talking about is $3 billion on China and $50 billion from the United States. That is a drop in the bucket, and yet we are freaking out about this. Come on, this is an environment where people have to understand that the president is going to do what he said he was going to do in the election. Now, you can agree with it or disagree with it, but he is going to put out his platform. I have comfort with that. That is transparency. Can someone please tell me what the economic policy of Ottawa is? Because I don't know. Right? So
I'm with you.
So with the Facebook situation, this speaks directly towards why blockchain is so profound, because blockchain is a database solution that cannot be hacked, and we control our data. And if somebody uses our data, we can track who uses it. That's why the blockchain is so profound, right? Everybody's freaking out about the Bitcoin, right, in these cryptocurrencies. Does anybody talk about the fact that the TMX and BMO just came out? It was reported yesterday that they're basically going to launch a cryptocurrency exchange where you're going to be able to purchase and buy Bitcoin and Ethereum. Does anybody talk about that? Right? I mean,
yeah, no, I'm with you. And Switzerland, I think, made an announcement this past week also. So, yeah.
Exactly. So all these things are coming. And for me, going back to your point, is it's difficult enough for me and our team at Caldwell to basically, this is all we do, to sift through the noise and the garbage that we hear out of the mainstream media. And so I think your listeners have to understand the fact that if there's one thing is, every company is going to become a technology company. That is going to be the biggest theme of our lifetime. And to do that, we need to have secure databases that are decentralized. That's the blockchain. And any company that exists that is making money by centralizing and taking your data and selling it to people unbeknownst to you and having that used unbeknownst to you, that business model will come under attack. And so if you understand that, and you also understand the fact that Donald Trump is not going to put the global economy into a recession, and we know that all we have to do is sit there and buy the dips as long as the yield curve is steep, then we look at these these situations over the past 10 days as wonderful, wonderful opportunities. And if your clients or if your listeners want to be traders, then in 8 or 9 weeks when everybody thinks everything is wonderful and the stock market has had a 12-week run and it's really, really strong, maybe you should take some money off the table, because there will be another period of time where there will be a high degree of uncertainty and cross currents where stocks will come down, not for any fundamental reason, just because of emotion, because of policies that were talked about, and then the computers take it over and they take them down to technical levels.
I'm talking with James Thorne. He's the Chief Capital Market Strategist. I think you can hear why I'm always love having James on with us. He's Senior Portfolio Manager, by the way, for Caldwell Investment Management. I'll take a break. I'm going to come back just to ask James about, I want to do the lightning round with him, of course, but first question will be, how do we invest in blockchain? Are we looking for the companies that already adopting it, or the companies that are originating it, the providers? We'll check with him when we come back right here on the Money Talks Network. Dr. James Thorne is my guest, CaldwellInvestmentManagement.com. James, just before the break, we were talking about blockchain. I know you guys have been on top of that for years, but just give us a quickie on how are you investing in blockchain? Is it the company that's doing the blockchain, or is it the companies that have adopted it?
Okay, Michael, there's 3 buckets we look at. One is it's called the permission blockchain. Those are the companies that are using the blockchain to increase margins or cut costs. We'll put Walmart in that bucket. So there's companies like Walmart, Coca-Cola, in those buckets, in that bucket. Then there is what we call the disruptors or the permissionless blockchains, and we would put a company like an Overstock.com in that. We would put a couple of Vancouver names. Hut 8 would be in there. Hive would be in there. And what those companies are doing is they are disintermediating existing industries. Okay? And then we have another one which we would call the enablers. And the enablers are what we call the arms merchants, or let's call about the general stores that are selling the picks and shovels to all the gold miners, right? And those would be like the chip companies, the software companies, and the semi-cap equipment companies. So you can do 3 buckets, and you can get really conservative companies like a Walmart. You can get companies that are very focused on basically disintermediating industries like an Overstock. And then you can get a chip company like NVIDIA that are making all the chips that are being used to disintermediate industries and help companies become more efficient. So it's a 3-bucket approach.
And it's fascinating stuff. And as you know, on this show, I've been talking about how key it is to get on board the Blockchain Express. So great stuff. For more, go to CaldwellInvestments.com. Time now for the lightning round. 10 questions with James Thorne. Are you all set?
Got it.
First job.
Pumping gas.
Favorite movie?
Casablanca.
Favorite historical leader?
Churchill.
Best concert or live performance you've ever seen?
Van Morrison in Harlem.
Oh, I just talked about Van last week. Best piece of financial advice you ever got or gave?
Quell your emotions.
What's your favorite way to pass time, like a hobby or a sport?
I love reading history.
Favorite city to visit?
Paris.
Best subject in high school?
Math.
Biggest financial mistake that people make, do you think?
Quelling emotions.
And favorite financial show on radio, you have to have a specific answer.
Money Talks with Michael.
There you go. James, seriously, what a pleasure it is to have you with us, and I want you to know how sincerely grateful I am that you find time for our audience, a huge audience, and they really appreciate, I'm sure, the insights as I have with James Thorne. Thank you.
Thanks so much, and I hope they appreciate the work that you're doing for them. Take care.
Well, that's great. CaldwellInvestments.com. As I say, Pendragon Fund. Also, of course, he does a Caldwell U.S. Dividend Advantage Fund, so check them out.